You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again. It is Monday. It is 2 p.m. Central, 3 p.m. Eastern Time to explore what's going on in the crypto derivatives markets. Yes, it is time once again for the Crypto Rundown. My name, of course, Mark Longo from theoptionsinsider.com, the home of the Options Podcast. We created this whole thing way back in the primordial ooze days of 2007. Actually, we were doing some previews back in late 2006. So pre-iPhone, pre-all this madness, before most people knew what the hell a podcast was. Fun times to be diving into the world of podcasting. But lo and behold, still rocking and rolling 16 plus years later, and the Crypto Rundown, a fun addition to the offerings here. Of course, if you want to check out the full suite of offerings, and you should, make sure you subscribe to the full network. If you like what you hear, do throw some stars or reviews or a comment or a like. Whatever your platform lets you do, all of it helps new people continue to discover this program and indeed the network. And of course, if you want to go above and beyond, check out the pro over there at theoptionsinsider.com/pro. A lot of great pro Q&As, including a lot to touch on the crypto space. So if you have questions about that side of the market, and of course, anything else going on in the world of options and derivatives and volatility, theoptionsinsider.com/pro is the place to go as we dive on into the Just the Facts Ma'am edition of the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do just that. We break down all the madness going on in the world's leading digital asset. Yes, we're talking the big dog, which is Bitcoin. A lot of madness unfolding. We got some questions about that. I think we'll get to that later on in the show. Right now, what we're seeing unfolding is a wee bit of downside, just a tick north of 29,000 as we kicked off the show. 29,077 to be precise. Our high, or really our level from the show last week, was just a tick north of 30,000, 30,008. To be precise, or down about 931 handles on the week. Of course, we dipped a little bit lower. In fact, right before the show, we were a little bit shy of the 29K level, 28,975 to be precise. So that was our low for the week, actually, as well, coming in right before showtime. The high came after our show last week, 30,336. So show days proving to be the action-packed days of the week out here, at least for the big dog, which is Bitcoin. Getting on out to some action on the vol side. And again, all this data coming at you courtesy of our friends over there at Amber Data, amberdata.io, AMBERDATA.io, the place to go to kick the tires and light the fires. They had a pretty cool webinar recently with our guest who was on the show last week from Deribit. So check out all that and a lot more cooking over there. They have a fun Twitter as well, where they're always tweeting out fun nuggets, and their newsletter, definitely a worthwhile read if you are intrigued by all the ebbs and flows of the crypto derivative space. Right now, that vol looking a wee bit light. Kicking off the show this week, the front month, so pretty much the 30-day vol in Bitcoin, 35 out there on Deribit. We have not seen it that low in quite some time. You know, we've joked about it since the early days of this show. I mean, the perception that crypto is just the most volatile asset class on the planet. In fact, there was an episode, I think, of that show, Silicon Valley, all predicated around that. The person had that warning going off on their computer whenever Bitcoin moved, and was going off all the time. These days, not so much. A 35, that's still frothy compared to a lot of the other asset classes we're going to talk about. Usually, look at VIX right now, pretty anemic at a 13 and change. So a lot of the other asset classes we talk about in this week in futures options, all the things that trade in CME. So the ags, the metals, looking a lot lighter. That said, we have seen a bit of an ags explosion from a vol perspective this past week. So some of them threatening that level. Nat gas is still going to be higher. It's in the 50s to low 60s. For Bitcoin, a 35 is pretty low. We've seen it obviously threatening triple digits out there in the past. Obviously a far cry from that right now. It is mid-July, so bear that in mind. Summertime, usually a seasonally light period from a vol perspective anyway. So some of that seasonality probably at play there, but intriguing stuff. You're talking it's pretty much at the first or second percentile for the year from a vol perspective. So things are pretty anemic out there and not showing any signs of getting frothier anytime soon. Doesn't look much better if we go out a little bit farther on the curve. If we go out 180 days, listeners, about half a year. It's at a 46 right now. It's at about a 48 and a third on our show last week. So longer term vol continuing to come in as well. Intriguing stuff. If you've been checking out maybe some premium buying type strategies, might be an interesting time. If you're looking to sell some premium, maybe not a banner time to be diving into that unless you're seeing some really good opportunities out there. Be judicious in your premium harvesting when vol is starting to get this anemic. Let's get out to the skew and see what's going on there. See if you see any biases right now lurking in the options flow. And last week we had the near dated skew, the weekly skew. Again, a lot of paper going up on the weeklies these days, so always intriguing to check out the weekly skew. That was biased to the upside about 2.25, so looking a little bit upside these days, has swung in the other direction. Negative about a third, so giving up all that upside, and it makes some sense. We saw Bitcoin retreating and coming off the lows for the week just earlier this morning, so it makes sense of that. Near dated bias would go away to the upside. Going out a little bit farther, going out about a month, so your traditional 30-day 25 delta put, 25 delta call, it's still biased to the upside, almost 2 points, about 1.8 points. It was about 1.33 points to the upside last show, so still a little bit of a slight upside bias there. Going out farther, 6 months, pretty hefty upside bias. That is kind of interesting. So going beyond this near-term noise, they are pricing in a little bit more upside juice, about 5.25 point premium to the upside. Last show, it was about 4 points. So intriguing stuff out there. Not a heck of a lot of movement on the OI front. About 196,000 calls open on Deribit right now. It's up about a whopping 5,000. Again, it's July, listeners. Not expecting a huge amount of action. And the puts, 87,000 contracts, opens up about 4,000. In terms of where the biggest movers were out there on the OI front this week, we have number 5, the 30,000 puts, 30,000 strike puts. So finally seeing some puts making it back into the top 5. They gained about 1,100 contracts this week for the number 5 spot. Again, all gainers this week, no losers, which is kind of interesting. Number 4, the 45,000 calls. That's getting up there. They gained about 1,300 contracts this week. Number 3, the 32,000 calls. They gained 1,400 contracts. Number 2, the 34,000 calls gained 2,600 contracts. And the big dog mover this week, the 31,000 strike calls, 2,850 contracts slotting in there. since our last show. So again, some interesting strikes. The 30,000 strike coming in on the put side, which is kind of interesting. And then some other, shall we say, optimistic strikes sliding in there as well, including the 45K strike out there. Let's go out to BITO. Is that your preferred vehicle? We have a question of the week about just that, listeners. We'll get to that in a little bit here on the show. Right now, BITO hanging out at about a 15.5. I should say that puts it down about half a point here on the week. In terms of action, got some paper lighting it up, but not a ton, which is probably explaining why the ADV is coming back down. We hit 50,000 again last week. This week back down to 46,000, down about 4,000 on the week. Today, maybe we might get there. 28,000 contracts going up today. The vol just getting annihilated, listeners. It's a 37 out here in BITO as well. That puts it in the second percentile for the year, down 9 points. That's a hell of a whooping. Vol apocalypse, some might say out there, listeners. Let's see if anything interesting is going up today. The big trade today are 3,200 of the July 16 calls expiring this week on the 28th. So it's like most of that is opening. Looks like paper was buying those. So some near-dated upside, thinking BITO can get back to the 16 strike by the end of the week. Right behind it, we have 2,500 of the 16 half calls also expiring this week. Those maybe not opening, though. So intriguing stuff. Maybe a bit of a roll there. Closing at the 16 halves, roll into the 16 calls for a week. We've seen crazier stuff. In terms of the top positions out there in BITO right now, it's still all calls all the time. Let's do a top 5 out here to keep things lined up because it is a lot of long-term paper here. Number 5, we have 27,000 of the Jan 15 calls. Those are interesting, given where we're hanging out right now. Probably the most, shall we say, realistic of the bunch because the rest is all getting up there. Number 4, 40,000 of the Jan 2025, 25 calls. Number 3, my favorites, 58,000 of the Jan 2024, 65 calls. The rest all Jan of 2025. We have 62,000 of the Jan 35s. And rounding out the top spot yet again, 80,000 of the Jan 30s. Again, these are all from 2025. So intriguing, longer dated upside paper out there in BITO. Again, that's kind of jiving with what we're seeing on the Deribit front as well. You go out 6 months, you have a pretty hefty bias to the upside on that skew. Seeing that reflected out here in BITO as well. Longer term, you like those, listeners? Jan 2025 30s. How about the Jan 2024 65s? Clock is ticking on those, listeners. Jan seems like a long way away. I'm not in a January mindset at all, but still. 65 by then? I don't know. We've seen crazier things. I mocked trades in the past on this show that came to pass very aggressively, so I've learned my lesson there, but still, interesting stuff out there. Let's see if we can find any interesting nuggets lurking in the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, portion of the show where we investigate everything going on out there outside of the big dog, which is Bitcoin, except for right now when we explore the top 10 from a market cap perspective. And I will say, these are more interesting days from a top 10 perspective. For a while there, we kind of had our set top 10. Not a lot of evolution out there. Lately, we've seen some evolution on this front, which is kind of fun. Cost you a little bit over about $7.25 billion to break into the top 10 right now. That gets you to Tron. Haven't seen Tron represented in the top 10 too often, but breaking in there this week, again, about $7.25 billion with the market cap. Number 9, right behind it, we have Solana, $9.4 billion. That one was on quite a tear recently. Giving some of that back this week, but still pretty robust. Number 8, back in its number 8 spot, listeners. It fought its way back to number 8. It is Doge, almost $10.5 billion worth of market cap. Number 7 is Cardano, $10.6 billion. Number 6, USD Coin, $26.6 billion. Number 5, BNB, $36.5 billion. Number 4, our old friend XRP, $36.9 billion. After it got that nice pop up to about 70, 75 cents, it seems to have settled out around that level now. So still some swords of Damocles poised over XRP, but looking better than it was when it was hanging out around the mid-40s forever. Number 3, Tether, 83, almost $84 billion with a market cap. Number 2, it's ETH, 221 billion. And the big dog, Bitcoin, a little bit lighter this week, 563 billion. Let's get out to number 2 in a market cap, number 1 in a lot of your hearts. This is ETH, off pretty darn close to $50, 47 to be precise. It was 1894 and change at the end of our show last week, 1847 and change coming into the start of the show this week, so down nearly 50 handles on the week. The low, again, coming in this morning, 1837, so about 10 handles lower. And the high coming, again, after our show last week, 1936. So a decent range, but not an explosive range for ETH, and settling out towards the lower end of that, which means the vol, like Bitcoin, coming in. You know, ETH structurally tended to be more volatile than Bitcoin. I say tended because ETH now coming in at a 33, just crazy. So we're seeing ETH vol lower than Bitcoin vol, at a 35 for Bitcoin. So you don't see that too often, listeners. Maybe some opportunities there on the vol spreading front. That's down 7 points. It was a 40 last week. So vol cratering across the board. It's just a crypto vol apocalypse right now, which is interesting given some of the headlines we're seeing out there. Again, we'll get to that in a minute. Longer term 180-day vol, it was almost a 48, about a 47.7 on our show last week. This week, 44.7, coming in a whopping 3 points yet again. So no vol is safe right now on the crypto side. They're coming for all of it. Skew-wise, looking a little bit more bearish on the ETH front than we saw on Bitcoin. A negative 1.5 on the weekly skew. That's down from about negative 0.5 last week. The 30-day skew was about negative 0.5 last week. This week is about a negative 1, so getting a little bit more bearish there. Some of that could be because we're just bouncing off the lows for the day as well. And then going out a little bit farther, 6 months, it was a positive 1 1/3. Now it's a positive 2. So again, longer term, we're seeing a little bit of optimism, even though if it is somewhat muted on the ETH front right now. OI-wise, not a huge evolution here as well. We have 2 million calls open almost exactly on Darebit right now. It's up about 20,000 contracts. The puts, 626,000 contracts open. That's up about 13,000 as well. So a lot of intriguing stuff out there on the ETH front. Let's get out to the top movers and shakers out there on the OI front. We have one put making it into the top 5 this week as well. So interesting stuff there. Number 5, we have the 20 half calls, a weird strike, 20,050 calls. They gained 13,500 contracts this week. Followed by number 4, we have the 2,100 calls. So that's more of what we expect, the even strike calls. They gained 14,000 this week. Number 3, the 1,800 strike puts. They gained 14,500 contracts. So one put slotting in amongst all the calls, kind of like what we saw in Bitcoin. 2,000 strike calls coming in at number 2, gaining 30,000 contracts, a little bit of a jump there. And the number 1 OI gainer this week, the 19 half calls, 38,500 contracts slotting in there. Interesting stuff. Solana, like we said, taking a bit of a break this week. It was 26.14 at the end of our show last week, 23.41 kicking off our show this week, down almost 2 3/4 from where it was this time last week. XRP about 73 cents last week, 70.5 right now, so down about 2.5 cents. Good old Doge ticking up 6.8 cents last week, 7.4 cents this week. So the mighty Doge fighting its way back up there. Litecoin 90, about 3/4 at the end of our show last week, about 89 right now. 89 about a dime or so, so up down about $1.60 on the week. Cardano 30.8 cents last week, 30.4 cents. Not a huge evolution there. Polkadot literally unched, not even 5 1/4, 5.23 last week, 5.23 this week. So not even a penny change there. And good old Shiba 0.000077 last week, 0.000076 this week. I want to breeze through those because I want to get to some of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, let's get to it, listeners. Tackling some of your crypto questions. Before we get to those, we have a question for you this week. Our question of the week, which you folks can play along with at Options on Twitter. You should be following us already. If you're not, you're missing a lot of great content, links to shows, discussion points, and of course, fun questions of the week like this one right now, which you can find over there at Options. It's pinned right now. If it's not pinned when you go over there, just scroll down a little bit. You'll find it there. It's very crypto options oriented. We're asking you this week, there are many ways for options traders to get crypto exposure in their securities accounts. Mara, Riot, Coinbase, and Bitto are all popular choices, But what is your weapon of choice for crypto options exposure? And again, if you don't see your favorite here, just reply or DM with your choices. Again, Mara, Coinbase, Riot, and Bitto. I know what my choice is. Right now, you folks in the early voting, again, this just went live an hour and change ago. So we'll have, just ticked again while we're talking about it. Looks like Mara taking the lead right now. I haven't talked about Marathon in a while, but you folks liking yourself some Mara, 41.7%. Bitto coming in at number 2. I would predict Bitto will take this, but time will tell. 25% for Bitto. And then we have a tie for third, 16.7% each for Riot and Coinbase. Intriguing stuff out there. Again, if you have something interesting, a name you like to trade options on to give you a little bit of crypto exposure, a little bit of crypto love in your securities account that we haven't listed here, by all means, have at it. But this was kind of prompted by some interesting discussion we had last week on the option block and some other shows saying, these names are starting to pop up again on our radar. Haven't talked about them in a while. Time for you folks to decide what your weapon of choice is out there. I'm curious to see what the results are. We'll reveal the final results on the show next week. Of course, you can vote all week long. At Options is the place to go to make your voice heard. And also, if you have questions or comments about the show or any other shows we have, at Options, a great place to vent those. Let's get out to this question from one of our pro members. This Mackenzie. She's our resident crypto head. You knew she was going to chime in about this one. She says, have you seen this news? What does this mean for the crypto market going forward? She sent a link to a Wall Street Journal article just coming out this morning saying some Binance U.S. crypto trading was a mirage, the SEC alleges. This is an interesting one. I encourage you to check this article out if you do have access to the Journal, listeners. If not, you can find other sources, of course, that will talk about it as well. Some of the findings in here are kind of damning out here. It's kind of interesting stuff. I'll give you some of these salient bullet points here, then I'll give you my thoughts, listeners. The article says just how much crypto volume is due to actual trades versus exchanges and coin promoters shuffling assets among themselves is an issue for regulators and investors trying to gauge the depth of these markets. The issue revolves around what is known as wash trading. Of course, if you don't know what that is, listeners, it's effectively an entity kind of buying and selling the same security, usually within their same account or within an account that they're affiliated with, something along those lines. So really, it represents no economic activity at the end of the day. Usually you buy a stock or an option, or in this case, spot crypto. You want it to go up, or if you sell it, you want it to go down. But if you do the same thing in your own account, if you buy and sell an underlying for roughly the same price, then you haven't really done anything, right? You've done no economic interest, but that volume is reflected. And that's why I've always been so skeptical about the crypto space touting these notional volume numbers. We'll get to all that fun in a second. Let's get to some other allegations from the article. They say concerns about wash trading in crypto markets have mounted, especially since trading volumes have become a crucial marketing point for crypto exchanges to draw customers into an opaque marketplace. Yes, that's one of my issues as well. They really focus on Binance US here because that's what the SEC is going after. The day after Binance US was launched in September of 2019, wash trading between Sigma Chain, it's a market-making group that's affiliated with them and is actually owned by the same CEO, and senior employees at Binance constituted nearly 70% of trading volume for one token. Again, that's just one token. Could be a small one. You got to dig a little bit beyond that. But then what's more damning, I think, beyond the SEC allegations is this study that came out of the Journal of Management Science, going to be published soon. They allege that 70% of total trading volume on crypto exchanges came from wash trading. Now, I have to dig into the study myself. They give some nuggets from the study here. First off, this was based on analysis of crypto trading in the second half of 2019. So not the most recent data set, quite frankly. One of the authors of this study is a finance professor at Cornell, my old stomping grounds. Can't trust a Cornellian. We all know that. But he says wash trading is a rampant industry-wide issue for the cryptocurrency market. The fact that they're faking so much trading is just appalling. So obviously, he has a vested interest in promoting his study, but intriguing stuff here nonetheless. They say the study estimated that wash trading would have lent to a fake volume of more than $6 trillion in the first quarter of 2020. Again, extrapolating from the data they had from 2019. They say, ironically, Coinbase, one of the names we mentioned in our question of the week this week, That's U.S. listed, so they're regulated in the U.S. Wash trading, a big no-no here in the U.S., listeners. So they say they didn't see any signs of wash trading in that same period on Coinbase. So maybe a win for the regulators here in the U.S. They say they didn't look into Binance U.S. because it launched in late 2019, so it's kind of outside the scope of their data set. But they did find that Binance, the parent company, the larger global entity, they wash traded nearly half of their volume, 46%. Some other damning nuggets from this article, they found internal Binance messages that say that their CEO was aware of it. People made her aware of this via internal messaging. Their matching engine, the thing that matches the trades on the exchange, kind of the beating heart of all these exchanges, listeners, it would match trades that could allow users to trade with themselves. The CEO replied that if some U.S. compliance or regulation entity says we must prevent this, we will. Otherwise, we will not. That's not good. More than a year later, another Binance executive said, hey, I just traded with myself. I hit my own bid. This is kind of bad. We should probably fix this. And then they never really got around to fixing it, it sounds like. So intriguing stuff, also damning. And again, getting back to the marketing angle of this, they tracked a lot of wash trading going through February 2022. And then that includes, they say, a period right before the exchange went out for another round of outside investment in 2021. So if you're pumping up this volume, then using that to go out to raise money, that is a pretty bad thing. And that is definitely something that sounds like the SEC is going to come after. Again, I've always been a little skittish about the way the crypto space touts this notional volume. Notional volume is a meaningless thing at the end of the day. If you buy and sell wash trade to yourself, you've transacted a lot of notional volume. You've done nothing at the end of the day. It's also why in a lot of our shows you'll hear us be dismissive of things like dividend plays and things like that, because those are almost effectively wash trades. They're often buying and selling the same strike or very near strikes, and there's really no economic intent going on there. So these wash trades are in a similar boat from that perspective. Now, then again, we have seen academics sometimes don't understand all the nuances of the space, so I need to go dig into this article a little bit and just study and see exactly what they studied, what their findings were, and how they looked at it. We've seen some similar allegations in the options world from people who didn't really understand the mechanics of how market makers have to use underlying to hedge their positions and so forth. I don't think that's the case here, but I'm willing to remain skeptical on both sides until I see all the data for myself. But that said, if this is anywhere close to what they're alleging, if half to 70% of this volume on these exchanges is effectively just back and forth with each other or with entities that they are affiliated to, that's a pretty damning thing for the crypto space. And again, proves why we've been so reluctant on this network to talk about things like notional volume all the time, because, again, that could be very misleading. I want to dig into this more, but yeah, Mackenzie, short answer is it is not a good look for the crypto space, and it sounds like they have a lot of internal data from Binance in particular. I think this study is more interesting. Again, I wish they had a more modern data set. The crypto space has evolved enormously since the second half of 2019. So that's my first question mark on this study. I need to dig into that a little bit more. But if their allegations do, in fact, prove to be correct, then that is a no bueno for the crypto space. It's something we're going to have to keep an eye on going forward. All right, hate to leave on a sour note, listeners, but that's just the breaks this week. Hope you enjoyed this Just the Facts, Ma'am edition of the Crypto Rundown. Getting back to some more hot seat coming up on the show in the coming weeks. Hope you've enjoyed a lot of our guests we've had on the show recently, including Deribit, a lot of big players in the world of crypto derivatives. More to come, so stay tuned for that. If you have a guest you'd like to see us discuss and talk to and analyze here on the show, then by all means, send them over here. We'll check them out and see if they are intriguing. Again, we like to focus on the crypto derivatives aspect, but there's all different flavors therein that are intriguing. So send it in if you have a intriguing guest you think would be fun for the show. That's going to do it for us on the network today. Back again tomorrow, noon Central for the advisor's option. After that, for all you pro folks, coming back 2 p.m., the great pro Q&A with our buddy Mr. Jim Carroll. The Vixologist, going to talk all things volatility, answer all your vol questions. I know you have a lot of them, so get them in. Crypto vol, we'll see if we can throw some at him tomorrow. Should be fun as well. Then, of course, after that, Wednesday, coming at you with a double dose of options boot camp. So if you're still new to this whole options thing, listeners, you're doing yourself a disservice if you're not checking out Options Bootcamp. Dare I say it, the best options education program out there. And we're not biased at all. Thursday, we have, of course, episode 2 of the Option Block, the bi-weekly options extravaganza. After that, This Week in Futures Options, talking about a lot of cross-asset volatility, including crypto. Friday, volatility views, and after that, for all you pro folks, options oddities. Then back again next week, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.